Good afternoon and welcome this afternoon to Market Movers, another great webcast from Schwab Coaching. Of course, my name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Brent Moores. And Brent's a 25 plus year veteran of the financial markets and a great friend and a great educator. He's going to be there to help answer your questions. Today is an interesting day, guys, and I say that every week, but it is an interesting day after an interesting week. We're going to talk about it as we get into this discussion. So I want to do this quickly because our webcast is 30 minutes today. We want to make it tight and give you some time back in your weekend. Now, let's jump into a couple of the housekeeping items here really quickly. Remember, everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any security or strategy or anything else. Also, remember, if we do talk about options, options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before you consider any option strategy. We're going to use technical analysis in this discussion. We're going to talk about other things as well. Remember that other ways of evaluating the market, any way that you evaluate the market is theoretical in nature. None of those are guarantees. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version. It is a great learning environment. It's not a guarantee of future success out there in the real world. And to that point, nothing is a guarantee that of future performance of the market, not even past performance of the market. So keep those things in mind. I'm going to switch our view over to the Thinkorswim desktop software platform as we take a look at how this day has progressed, how these last few days have progressed, because it is a different market than when we were last together in this particular conversation here on a Friday afternoon. Again, thanks to all of you for being here. Welcome to all of you that are brand new to this webcast. Welcome to those of you that are watching in the recorded version as well. Leave your chats in the comment section. Chat in here. Brent's going to be helping to answer those, and you can follow us on X at Ben Watson CS or at Brent Moores CS. And all of our other education coaches are there as well. So the elephant in the room, the big elephant in the room is the move that the SPX and the market as a whole has made in the last 2 days post the tariff specific information. Now, I just want to say this really quickly, first and foremost. As we look at these markets and as we have these conversations, it's an important thing to make sure that we focus our conversations on what's going on in the market, what we can objectively look at, as opposed to speculation, as opposed to fear, as opposed to, hyperbole. We're going to use technical analysis to help frame what's going on. Also, the other thing that I'm going to ask you to do in the chat specifically is keep the conversation focused on the topic at hand. Let's leave the politics aside. Friday afternoon is not a great time for that discussion anyway, especially when it has been a long week. So let's focus on what's going on in the market. I'm going to zoom in over here on the right-hand side, because the first thing that we can see that's happened, if we kind of look at this in the context of big events, is that we've taken out the August 4th low. I posted on X about that just a few minutes ago. But I think the second thing that we can do is we can take a look at the magnitude of this movement. And we're going to take a look from the closing price on Wednesday, which was right up here, to the closing price today. We can just do a real quick measurement here. I'm just going to use my trend line tool on the Thinkorswim desktop software platform here on the charts. I'm going to start my line right there. I'm going to drag my line down to not the low, but down to the closing price for today, and we were down 10.52%. So that tells me the magnitude of this wipeout in the last couple of days, right? From that closing price on Wednesday to this low. We're not quite the low here where we are, right? We came up off of the lows just a little bit. There was some buying pressure coming in towards the end. We'll look at this in the intraday chart here in just a second, but that's 10.5% move to the downside. 10.5%. Remember, we look at a 10% move being a correction, 10.5% move in the context of the larger move. So if we were to take this from our high Let's come back up here to the high to where we are now. And that move from a percentage basis is about 17 or 18% off of that high. You can see that line that I've drawn in. You can see the specifics up here in that status bar. I'm going to just kind of come down to that low, about 17.5% down from the highs. So from that particular perspective, that's almost bear market territory, right? We think about bear markets being better than 20% to the downside. And we've added that move to the move that we've made here recently, the off of the February highs into that little bit of a rally. We saw a little bit of a bear flag. Now, maybe the thing that we can look at and maybe hang our hat on, not necessarily, is if this were a bear flag, and we duplicate that move, let's take that duplicated move and we put it right back down here to the bounce down off of that bear flag. We went a little bit further than that bear flag measured move, right? So that doesn't mean necessarily, and again, right, and to Kenneth's point and to BJ's point, to Isaiah's point, that we can't go lower. We certainly can. But, you know, if we look at where these levels are, where this particular level is, we're at 5074 on the close, 5074 on the SPX index. That's awfully darn close to 5,000. 5,000 likely to be potentially a big round number level of support, big round numbers. The market likes big round numbers. So I kind of asked the question, and I kind of went back and I said, hey, when were there other times, to BJ's point and to Jim L's point? Black Monday, 1987, I remember the day. I remember I was sort of ancillary in the market. I started trading in about 1984 with my dad, and Black Monday of 1987, I was getting ready to take a trip to Yellowstone National Park with my dad to go fly fishing, and we stopped and, you know, made some decisions about some of the positions that we had. So what I want to do here really quickly is I want to go back and take a look at times where this market has been down 2.5%, or excuse me, 10.5% in 2 days, and then what has occurred after that. Not, again, that past performance is an indication. So I went back and I looked, and the times that are most significant in terms of 10.5% down in 2 days, the most recent we can go back to is April of 2024. So I'm going to go back to this chart. I'm going to open up this chart, and we'll do this on a weekly basis. So we'll go back to April of 2024, and we saw that move to the downside better than about 10% on a 2-day basis, right? We saw that move to the downside, and then we got a rally. That was in the context of this longer term up move. So that move there resulted in an up move. That was part of a perhaps bull flag type of rally. So that gives us some context in that the trend, this was the move higher and then the little bit of a pullback, and then we see the move higher there. So there's some context to that. Now if you think about it and put it into kind of relative terms, we're at 49.51 off of that low in April. Again, we're pretty darn close to that at this point with the SPX. Okay. Now, the next time that happened, and I'm going to kind of zoom back out here a little bit, was in March of 2020. So I'm going to actually extend our time frame here. I'm going to go out about 10 years. We'll keep this on a weekly chart, and I'm going to go back to March of 2020. And so here's that March move of 2020, that discrete V bottom. And we saw that move higher after that March pullback in 2020, and we get the rally up off of that COVID low. Now, we could maybe make the argument that this was different, that there were other issues that were weighing on the market, and then because it wasn't a function necessarily of the market, but we had some of the same excuses, right? Supply chain issues. We have supply chain impacts. We have demand destruction. We have Nobody's going to be spending money. We have rising interest rates because of inflation, because of exorbitant inflows into the money supply. I mean, all of those things, right? All of the things that are swirling. And we had the market move up off of that low. That recovery was, again, to Jim's point, to Villager's point, pretty fast, right? Pretty fast move to the upside. Now I want to go back in this time frame. I'm going to go back 20 years. And I'm going to go back to this low back in November of 2028. Or excuse me, 2008, right? This is the beginning of and kind of the move into the depths of the beginning of the financial crisis of 2008, 2009, right? And we can see that kind of move down again, similar type of move. It continued lower. We got another leg down of about 5%, and then we got that kind of March discrete bottom low. March has tended to be relatively a bullish time, especially after a pullback. Now we're out of March, we're into April. So the question is, does April go out like a lamb or like a lion? I know that's March. I know that sometimes that weather relationship doesn't matter, but do we get a continuation to the upside? Do we get a bounce? Is this capitulation? Now, the one other time, and the time that we were just talking about in terms of Black Monday in 1987, let's go back, and I'm going to have to go to a different time frame here. I'm going to have to go to the max time frame available, and I'll keep this on a weekly chart. And some of you, we talked a little bit about this morning, as a matter of fact, when I was on Trader Talks with Kevin, and we were talking about this kind of longer term trend. But I'm going to scroll back in this list. So this is looking back all the way. In fact, this all goes all the way back to 1928. But I'm going to go back to that move in 1987. So here we are right here. This is Black Monday in 1987. And I'm going to scroll down. And we see that similar move to the downside. Now, this didn't occur in March. This occurred in October. And we saw that move to the downside. And then that was the beginning of kind of that washout and then that rally. And the rally in that October low, if we had started at that particular point, so we saw the October low, it rallied back up a little bit. We pulled back and retested in that same area. And then the SPX took off. And the SPX started to rally, and it made new highs about a year and a half later. So the question is, as the question always is, does that past performance, does that past move, do these past washouts give us some indication of what potentially could happen here in this particular case? And that remains to be seen. And that's why, as we look at the chart here, I've got this big question mark right down here at the bottom, right? So here's some of the things that I want to kind of keep into this mix, right? And I appreciate all of the conversations. By the way, speaking of conversations, you happen to notice that there is a feedback survey in the chat. Do me a favor, help us to make these webcasts better by clicking on that feedback survey and telling us what you think, giving us that information, helping us out with this webcast. Anthony says, what I'm hearing is be patient. And I think maybe there is an element of that. Now, what does that mean? Does it mean it's easy to sit on your hands and be patient? No. Is it easy to live through a day like today or days like today? Not necessarily. But is it maybe prudent to be patient? Sure. Now, what do you do, right? Because at this point, risk aversion says, wow, if I sell everything now, I'm taking a big loss and I don't have dry powder to then I potentially have dry powder, but we anchor ourselves to moves like this. And we say, wow, I'm gun shy. I'm not going to get back in until this gives me some strong confirmation. And then maybe we miss that opportunity to get back into the trade or back into positions. BJ says history doesn't repeat itself, but it oftentimes rhymes. Mark Twain famously said that on his MySpace page, I think, is where Mark Twain posted that. I'm joking. But let's take a look at a couple of other areas of the market as we kind of pivot off of the SPX here. I think this is the big kind of elephant in the room, but there are a couple of things that I want to talk about, right? And Derek makes a good point, and I appreciate everybody just kind of chatting in here, because sometimes conversation is a good part of kind of helping to digest this information. It's a good time to have a strategy and follow it. But I want to take a look really quickly at this. I'm going to come back and I'm going to put this on a 1-year daily chart. I'm going to look at VIX. And this is just VIX. This is the volatility index, right? And something interesting has happened. This is the yen carry trade back here in August low, right? That August move to the downside. And we see that yen carry trade spiking VIX all the way up in a couple of prints up to that 65 level. And it's been the highest at that point that we've seen in quite some time. And then it came right back down very, very quickly. Now, here's what's interesting. And I talked about this morning with Kevin Horner on Trader Talks webcast, the Trader Talks webcast this morning, about what was going on with the VIX into today. Was that VIX was staying relatively muted. There was an element of not buying protection on the part of institutional investors, but maybe selling off positions. Now I think that's a little bit different. The fact that we got this big panic-driven spike on the VIX, and that it stayed at the end of the day up very, very close to its high, suggests that maybe this is that capitulation, that big spike in the VIX. That's, and relatively historic spike in the VIX over the course of this last year suggests that maybe that was that capitulation. Now, I want to do one thing here as we look at the VIX. I'm going to go to product depth, and I'm going to go to the VIX futures. Now, I'm not using this as a tradable instrument, but I'm using this as a measure of the market, right? So looking at this scenario with the VIX futures being significantly lower out into the future than spot VIX at the moment, right? This is Tanya, who asks the question, what are some of the hallmarks of capitulation? An expansive volatility spike is a hallmark of capitulation, right? Selling pressure that brings in volatility. What this simply means is there was a lot of panic buying of put options on the S&P to hedge long stock positions, as opposed to keeping that S&P low by selling off, or keeping that VIX low by selling off those long positions, right? Yeah, MC, linear regression is an interesting thing, and Cameron May just taught a little bit more about linear regression earlier today. So I'm going to point you in the direction of some of those webcasts. But what I wanted to suggest here in terms of this perspective is this is a scenario that you don't see very often in the VIX, where it is backwardated in the futures contracts, meaning there's an expectation that volatility is going to be significantly lower in the future based on a high print in the spot VIX. So you don't normally see this. You normally see a curve in the VIX that looks like this, right? That there's expected higher volatility in the future because higher potential moves for news, right? So this is kind of that, one of these things is not like the other, and this could resolve in a VIX coming down pretty quickly. Doesn't have to, but it could. So what does that tell us? Well, if we get a big VIX spike, let's go back to the chart. We get a big VIX spike and it bleeds off quickly. That could be, again, another hallmark of capitulation. Now, here's the thing, and I want to bring this up and kind of in calming the waters and feeding the ducks here, is that we're starting to see deals that are happening around the around this global trade issue that are already having an impact on individual stock positions. Let's take a look at a couple that stuck out at me. NKE, which had a pretty big exposure to Vietnam and some of those other countries that were being, targeted specifically in terms of some of these tariff impacts. And we see that already there's starting to be potentially some capitulation on the part of some of those countries in terms of the trade agreements. Now, these tariffs have not gone into place yet. So this is all fear and anticipation. This move right now, though, comes on the heels on Nike, and we'll take a look at another one here as well, comes on the heels of actual conversations with those countries in terms of negotiating those tariff rates. So we're seeing some potential movement up off of these lows. Lululemon is another one that has exposure offshore, right? And when we start to see that kind of potential for impact, fake or not, right? Conversations or not, if we start to see that that expectation, this is as real a move in terms of price as anything else that was going on with the SPX, as anything that was going on with the VIX. These moves were happening. So what I thought maybe we would do here in the next couple of minutes, just to kind of bring this together, is take a look at what, in fact, was benefiting from and where there were some areas of potential strength in this market. And it's an easy thing to do here on the Thinkorswim platform. And again, not that that is guaranteed, but if you want to think about where there might be, if a trader has dry powder, has an opportunity to step in. And Brent made a great comment to me earlier today as we were having a conversation. And he said this. He said, when markets move like this, right? He says, how many times have we looked back and said, if I only had the guts to buy when things get crazy, where would we be? And I'm not suggesting that. I'm absolutely not making a recommendation. But I'm saying, look, if we're at that situation where there is capitulation, and I appreciate Brent letting me borrow and take that quote out of this discussion. But if we are looking at this as being an area where there is that possibility for movement to the upside, because there will be leaders that will emerge, there will be opportunities that will come up to the top of the page here, to the top of the Thinkorswim platform. We go to the Market Watch tab, and I popped into a publicly available watch list called Lovers, actually Top 10, and I went to Top 10 gainers in the NYSE, right? Or Top 10 gainers in the NASDAQ. And in fact, I picked NASDAQ in this particular, there's Top 10 net loss. I didn't want net loss. I want Top 10 net gain on the NASDAQ. So where that leadership occurs is where buyers are starting to step in. So MicroStrategy, Lululemon, Deckers Outdoor, Crocs. And this changed towards the end of the day. But this is an area where there are some of those green shoots, right? So let's take a look at a couple of these. Let's take a look at MicroStrategy. We'll take a look at the chart here really quickly on MicroStrategy. And not that this was a big move to the upside taking out highs, but this is a hammer-like candle at a level of support. Take a look at Lululemon, like we were just looking at on the chart. This is, as Brent pointed out, a bullish engulfing candle at a level of support. If we take a look at Crocs, this is a bullish engulfing candle at a level of support. So there's buying that's happening, right? And that buying is coming in at places. I'll take a look at Deckers here as well. Gap down and rally, bullish engulfing candle. There is buying happening in selected locations. Where are those selected locations coming from? Well, again, that's going to follow news flow. And I think a lot of this information is following that news flow. So those are some of those areas that we can pay attention to, right? So what are some of the other screens that we can use to check for individuals outperforming the S&P 500, potentially with more technical indicators just than price movement? Come over here to the scan tab and take a look at some of the pre-built scans that are already in the Schwab.com scan page, or build a scan right here for looking for stocks that are providing opportunities that are maybe yielding dividend. I taught about this earlier this week, yielding dividend that have some upward movement, and run those scans and find those that are seeing some potential movement. Cheesecake Factory, KB Homes, again, some that are seeing some potential upward change. Let's take a look at KB Homes. KBH. So as we finish this up, a bullish engulfing candle here on KB Homes. So a couple of things I want to finish up with. I want to take a look. So we can build some scans, and I'll show you where to find some of those other scans in this discussion. But I wanted to finish up with a couple of other areas. I want to look at the interest rate at the Treasury yield. So I'm going to use 10/10Y. This is the futures contract. And as a measure of a futures contract, we're not looking at this as a tradable instrument. But notice what's happened in the last 2 days is that, and in fact today, this ended up below 4 for the first time really since last October. So we've seen yields coming down. That means that money's been flowing into bonds. Bonds have been getting bought. So if there's a rotation into bonds as a safe haven, that may be where that money comes out. So look for a potential reversal in yield to give an indication that money is flowing back into the market. We saw that at the end of the day here. That yield came off. That means that bonds were being sold. Money was going someplace. Where was it going? Well, it wasn't /GC going into gold because it was coming out of gold. So sellers were selling bonds, sellers were selling gold, and they were putting that money someplace. It wasn't just necessarily sitting in cash because /DX, the dollar was coming back up. So what does that mean for things like real estate? What does that mean for areas that are interest rate sensitive? Interest rates coming down maybe benefits some of those interest rate sensitive areas. Now, the other thing /CL that I want to bring into this mix is really quickly this. Energy getting hit, but coming up off of the lows. Getting hit at this point, coming down below 62, almost to 60, suggests that energy market buyers or sellers in this case were pricing in a greater potential for demand destruction. But at the end of the day, they reversed that and started to come for it and buy it off of those lows and bringing those lows back up. That could mean that that possibility of fear that was just abject this morning is diminishing a little bit today. So is there likely to be some weakness over the weekend? Yes. Is there likely to be market movement over the weekend? Yes. But be patient. Time will tell. Use the weekend to sharpen up your skills. Come over here to the Trader Talks webcast page. Look for new opportunities by finding education and resources that you can put to use in this market, because we don't know what this market is going to do over the weekend, and we don't know what it's going to do Monday. We never can. But I'm going to say this once again, as I always do on Friday afternoons. This is an opportunity for you to put your skills to use, to build those skills, and to be patient and not panic. Guys, as I always say, keep your arms and hands inside the ride at all times. Hang on and have fun. And we will see you back again on Monday morning for more information. Guys, have a great weekend. My thanks to Brent Morse. My thanks to our great production staff. And my thanks, of course, to all of you for being here and joining us for this closeout to the week. Have a great day, everybody. Take care. Bye-bye.